Again, being a global logistics company, we are, our platform covers about 90 or 95% of the global GDP. So anything that impacts global GDP will obviously be negative for our business. So one of the main challenges, obviously, is global growth. And, we're seeing some of the challenges that are coming from in Europe and, even in the US. So I think that's a risk for our business. The emerging markets, while they are dynamic and tend to have better than average growth rates, they also tend to be dynamic from a political perspective. And I think the events of the Arab Spring have demonstrated that very clearly. We believe that on balance, these emerging markets will be better for our customers as well as for our shareholders in the long run than the developed economies will be, because there's a lot more work to do. And they're starting at a low base in terms of market potential. And I think that even in spite of the strife and some of the changes that we're witnessing in the Middle East, there's people still need to consume food. They still need to consume medicines. And there's a substantial opportunity for logistics to be part of any value proposition for a company looking to do business in these exciting markets. We're fortunate in that the company has very limited debt. In other words, if you look at our balance sheet and you look at the cash that we have and you net it from the debt, we're basically in a situation where effectively the company has little or no debt. So I think that's a very healthy place to be in, especially given the turmoil that we've seen in the world financial markets. Financially speaking, of course, we always like to do better. We are fortunate that we have a very substantial revenue base. Our company is close to $5 billion in revenue. And we're, of course, always looking for ways to make our business more profitable and efficient. And I think we took some really important steps this year. And this next year, 2012, will be increasingly important to us. And most of our focus will be on our core platform and our core business. We're not looking really to acquire any new companies. We're looking to optimize and improve what we have. And I think that's a healthy place to be. Because sometimes when you do things very quickly, as we have in the past, we haven't always had time to go back and actually really tighten the screws and make things work as well as they should. And I think now with the way the sort of growth has, I would say, slowed down in the global economy, it's an opportune time for us to really look internally in the company and figure out ways to make our business more efficient for its shareholders.
Mm-hmm. So 2012 will be a year of consolidation with focus on improving our profitability, improving systems.
That's for sure. I mean, we'll focus on really improving our own business by focusing on our core business, not by acquisitions, by focusing on important technology initiatives that are designed to make our company more user-friendly to its customers and at the same time more efficient.
Mm-hmm.